What's up, Trader's Edge? It's Mark Sebastian, your only option, and this is the week that was. Today, we're going to talk about the craziness that was the S&P 500 and the Qs. We're going to talk about what's next for the volatility index. We're going to take a little look at what happened with bonds, and we'll wrap things up by talking a little bit about the yen versus the dollar, and maybe a little bit about the Russell 2000. So with that, let's dig in. Well, folks, it's official. We launched our brand new backbone strategy in the trading desk using SVIX. This is a strategy I've been working on for 6 months. It is our easiest and simplest way to express a volatility position that we've ever come up with here at Option Pit. You're going to love it. If you haven't seen it yet, click the link and watch the event that we hosted on Wednesday. You will learn a lot, and you're going to find out exactly how things like SVIX, VXX work, and why I'm so confident about my new strategy. So now that we've got that out of the way and you're already leaving to go check out that video, let's take a look at what happened with the SPX, because my goodness, what a move. The SPX absolutely, I mean, I've never seen anything like this. We went from volatility absolutely exploding just about 2 weeks ago to and breaking the 150-day moving average to just blowing higher over the course of 1, 2, 3, 4, 5, 6, 7 days. It took us 3 days to drop from, call it 55.80 down to 5,100, and we made it all back in about a little over a week. This is some of the nuttiest trading I've ever seen. I was talking with Andrew, my partner in crime, and neither of us have ever seen a move like this. I'll talk a little bit about what I think the ramifications are at the end. Looking at the Qs, very similar, but just more violent. They actually broke the 200-day moving average and are now back above the 50. They actually have a little more work to do. If you're really bullish the Qs, there's upside. Now, where is the upside is your question. Well, I don't think it's an Apple at this point. I'm not saying short Apple. I've learned that lesson. The stock's been up 10 days in a row. Probably not in NVIDIA either, although NVIDIA, as Leisha said, might be going to 130. I'm looking at Amazon, where I still see some real upside, and then potentially Google as two areas where you could see a bid, and lastly, Microsoft. Those three, if the Qs are gonna keep going, those are the three that are gonna lead us higher. Now let's talk about what happened with the VIX, because I got to tell you, folks, we went from a high, maybe not a tradable high of 65, but a print of 65, tradable probably into the 50s, to back below 15 in the quickest I've ever seen. I was thinking we could be back below 15 in a month, not a week and a half. This is just absolutely bananas. But based on the way we're trading, look at the futures term structure. Based on the way we're trading, there's a decent odds that VIX just stays below 15 for a while. We could even see a 14 VIX, especially if Jackson Hole and the DNC go pretty smoothly. We could absolutely see volatility fall back below 14, where, if you pay attention, it was kind of hanging out for most of the year until July. And I would like to point out, people say this yen thing came out of nowhere. No. Volatility started to rise right around July 17th. My warning signals about, hey, something big is going to go off, that really started on July 24th. That's when I got my big warning signal. So this stuff, we do get warnings when events are going to happen. If you're watching closely, if you're involved. So pay attention. right now, what I'm looking at is volatility collapsing and potentially going to 14. Where else is there potentially opportunity? Well, let's take a look at IWM because of the indexes, this one maybe has the most ground to make up. It got absolutely pasted, did touch the 200. It was already lagging, and if it's gonna get back up, I mean, I think it's got a good shot at breaking back above 220. I like IWM for next week, and it's finally starting. It really wasn't participating with the rally, and then just started the last couple of days. Don't be surprised if we see the S&P and the Nasdaq flat a couple of days next week, and you see a lot of strength out of the Dow Jones Industrial Average and the IWM, because the diamonds are the other ones. The Dow, that's the other one where there's a little more ground to make up, although it did have a nice day, relatively speaking, on Friday. All right. Lastly, I want to look at the bond market because we've got the Fed talking. Bonds remain strong. That rally, that's telling you the Fed is going to likely drop rates. The housing numbers from Friday, another good reason for the Fed to potentially drop rates. Now, what does that mean for you? Well, now that we know rate cuts are coming, bad news is bad news, good news is good news. Get back in that habit of understanding that a good economic report is a good economic report. Lastly, I want to just kind of close on the JPY trade. The yen has stabilized. This is FXY. It's the JPY versus the USD. It's stabilized, been hanging out. Just keep an eye. If this thing breaks above 63.5, we could have some fun heading our way. All right, folks, once again, make sure you're checking out the video that I made with Hannah and Andrew around our brand new backbone strategy. Click the link in this email. And if you're watching me on YouTube, like, subscribe, and leave a question. I will get to it. I hope you have a great weekend. I'm Mark Sebastian, your only option. Have a good one.